So thank you for joining us today. We'll talk through how to navigate some of the upcoming changes to the Form ADV. So here we'll have an agenda that will give you a general sense of what we'll talk through today. You are able to submit questions throughout the webinar. You can use the dashboard on the right side of your screen. We will try to get all of the questions answered at the end, time permitting. If we don't get to your question, we'll reach out to you after the webinar. So in terms of compliance dates, the new form is coming into effect on October 1st. So basically anything after this week is going to need to go on the new form. So if you need to add a fund for purposes of Form PF reporting, or you've got an office move coming up, that is going to need to go on the new form. The SEC did come out with some guidance in August stating that if you don't have enough information to fill out the new or amended questions in item 5, that you can put a 0 in as a placeholder. If you do elect to take advantage of this, you will need to add a corresponding note into the miscellaneous section of the Schedule D. And please note that, this is only a short-term exception. Once you file your annual updating amendment, you will need to complete those questions. And it's only a carve-out for the questions in item 5. So you're still going to need to complete those other new pieces of the Form ADV. To the extent that you don't really think that you're going to have a prompt amendment coming up, you're still going to want to start to think through the data that you're going to need to complete your annual updating amendment. So go ahead, let your finance team know about these changes, let them know what they're going to be expected to pull together to help you get these questions answered. So we'll start with information regarding separately managed accounts in item 5. The SEC is deeming separately managed accounts to be any advisory accounts other than those that are pooled vehicles. And pooled vehicles are going to be registered investment companies, business development companies, and pooled vehicles that are not registered, such as private funds. And there is some chatter out there about whether a fund of one could be a separately managed account or perhaps a UCITS. We've reached out to the SEC to try to get some clarification on that matter, but unfortunately we have not heard back. So at this point, particularly with a fund of one, it's probably going to be a rather fact-specific analysis as to whether you need to treat that as a managed account for purposes of reporting on the Form ADV. So if you do have any RAUM that's attributable to managed accounts, you're going to need to complete the new Section 5K1 and potentially the new Section 5K2 and 5K3. So 5K1 is going to ask that you report on the percentage of managed account RAUM that's invested across 12 broad asset categories. And some examples of those categories are going to be types of equities, different types of bonds, pooled vehicles, and there's also going to be kind of a catch-all there for other. If you do elect to use this catch-all, you are going to have to specify the type of assets that you're deeming to be in this other category. And some of these assets are going to fit into more than one category, or you may be required to apply some discretion when making a determination. So in that case, you are allowed to use your own internal methodologies, so long as you're consistently applying those methodologies, and also making sure that that information is consistent with what you report internally, as well as to your clients. And, as with any section of the ADV, you always want to take care to not double count assets. And you definitely want to consult the glossary of the Form ADV because it is going to contain differences and nuances in terms of definitions versus the Form PF versus the ADV glossary. And really anything that's in italics within the ADV is going to be a defined term in the glossary, so do make sure you use that resource. And actually, a question has just come in that I think is relevant to everyone on the line, so I do want to go ahead and answer that question now. Someone has asked what for an example of a difference between a Form PF instruction and an ADV instruction, and one of those definitions will be sovereign bonds. So there is a difference in the definition of sovereign bonds in the PF glossary versus the ADV glossary. So if that's something that your firm invests in, you're going to want to pay particular attention to that definition. So if you have at least $10 billion in RAUM that's attributable to managed accounts, you are going to have to report these percentages on a mid-year basis and an end-of-year basis. So the mid-year reporting is not going to require a prompt amendment, but rather it's going to be entered on a looking back basis. So, you know, this coming March, when you fill out your 2018 annual amendment, say that you use a year-end date of 12/31/2017. Your mid-year date is going to be 6 months back from that, so that's going to take you to June 30. And it's for advisors that have less than $10 billion in RAUM attributable to managed accounts, you only have to report this information on a year-end basis. So item 5K2 is going to require you to report information regarding the use of borrowings and derivatives in these managed accounts. If you have $500 million but less than $10 billion in managed account RAUM, you're going to have to disclose the amount of that RAUM and then also the dollar amount of borrowings attributed to those assets that correspond to 3 gross notional exposure levels. And this is going to be entered into item 5K2B. If you have at least $10 billion in managed account RAUM, you're going to have to complete section 5K2A, which basically includes the same information that's asked for in 5K2B, but in addition, you're going to have to disclose the derivative exposure across 6 derivative categories. And it's important to note here that you can limit this reporting to individual accounts of at least $10 million. That's a pretty low threshold, particularly in the private fund space, but you do want to take that into account, you know, as you're filling out the ADV. And so we've actually had another question come in that I think will be useful to answer for everyone on the line. Someone has asked whether there's going to be a place to disclose assumptions or other relevant points with respect to this reporting, kind of similar to how you're able to do on the Form PF. And the answer to that is yes. Under each of these, there's going to be an optional space to provide a narrative description about the manner in which you use borrowings and derivatives in these managed accounts. But again, that's optional. If you don't have anything to disclose there, you can, of course, leave it blank. So new item 5K4. This is going to ask that you take your total RAUM and back out the RAUM attributed to registered investment companies, business development companies, and pooled vehicles. So once you have that number, if any custodian that you use holds 10% or more of that amount, you are going to have to complete a section 5K3 for that custodian. And as you can see here on the left-hand side of the slide, some of these questions are pretty similar to question 25 within the section 7B1 that you complete for your private funds. But in this case, it's always going to also going to ask for the amount of RAUM that's held at that custodian. And the SEC did update their FAQ this summer, and they've stated that if one of your custodians uses a sub-advisor, perhaps for settling trades or for trade execution, you are not required to report that sub-custodian. You only need to report the custodian itself. So just some additional comments about reporting for separately managed accounts. If you're sub-advising that account, you only need to report on the portion that you sub-advise. And if you don't provide continuous and regular supervisory or management services to that account, you're not going to be disclosing it in item 5F, and therefore you don't need to disclose it here in this item 5K. Also, regardless of your office location, U.S. or non-U.S., you do need to report on all of your separately managed accounts, regardless of their location. So if you're a non-U.S. advisor and you have non-U.S. managed accounts, you're still going to have to report on those. So we'll move on to some of the updates to item 1. And again, something to think about in item 1 is asking for information about the investment advisor itself rather than its clients. So one of the bigger updates is to item 1F on branch offices. So you're going to need to provide the total number of those offices at which investment advisory business is conducted, And then of those offices, you need to report on the 25 largest in terms of number of employees. So if that branch office has a CRD number, you can enter that in and the system will automatically pull up the address, phone number, and fax number of that location. If you don't have a CRD number for your branch office, that's okay. You don't need to apply for one. You can simply leave that question blank. And with respect to these branch offices, you're also going to have to identify from a list of securities-related activities, the business activities that are going on at that branch office. And it's important to note, there's items 1 through 7 for those business categories, but there's also a catch-all at the end that you want to pay particular attention to. So you basically need to describe any other investment-related business activities that go on at that branch office. And investment-related is a defined term within the ADV, so you'll definitely want to take a look at the glossary to make sure you understand that and that you're fully disclosing the activities that go on at that branch office. Also, you need to note that this stuff only needs to be updated with your annual updating amendment and not more frequently. So that kind of goes against what we know with respect to item 1. Typically, those changes in item 1 are going to need to be made promptly, but this is the exception here. So again, item 1F, you only need to update on your annual updating amendment. So moving on to social media. Aside from the managed account stuff, this is probably the area that we're seeing the most buzz about. So basically, if the advisor has one or more social media accounts, on Twitter, Facebook, LinkedIn, you're going to need to disclose that and then include the address of your social media pages. And this is going to be limited to social media platforms where the advisor controls the content. So you don't need to report on your employees' social media accounts. The exception here really could be, a one-man shop where it's kind of difficult to discern control over that content because the advisor and the employee are essentially one and the same. And you can also limit this reporting to accounts that are publicly available. So if you have an internal social media platform, you would not need to disclose that. Also, if you have a social media platform that's used to promote the business of an affiliate that's not registered with the SEC, you also don't need to disclose that. And because this is in item 1 and item 1 changes need to be made promptly to the ADV, you are going to need to add new social media accounts as they arise. And some of the commenters to the rule touched on this, saying that, it might be somewhat burdensome for advisors, but the SEC feels that, since the social media landscape is so dynamic and constantly evolving, they want to make sure that investors have access to the most up-to-date social media information pertaining to advisors. So do keep that in mind, as you're contemplating, taking on new social media platforms. In terms of miscellaneous updates to the item 1, you are now going to need to provide all of the advisors' CIK numbers. This is regardless of their public reporting company status. And again, this is going to refer to the advisor's CIK number as opposed to the funds that it manages. So if you're making Section 13 filings or other types of EDGAR filings, you're more than likely going to have a CIK number. If you're unsure of what that CIK number is, you're able to look that up on EDGAR, or you could reference those filings that you've made. In terms of item 1J, you're now going to be asked to report whether the CCO is compensated or employed by any other person than the advisor. And in that case, you'll need to say, you'll need to report yes, and that provide that EIN number. There is a carve out there, and that's basically if the sorry about that. We had a technical difficulty. So back to item 1J, the carve out there is if the CCO is compensated or employed by a 40 Act registered investment company. In that case, you are not going to have to disclose that. In terms of item 1.0, you will be required to disclose whether the advisor has assets of $1 billion or more, and that disclosure is going to be within 3 asset ranges. They're listed here on this slide. And in order to answer this question, you're going to want to take a look at the total assets shown on the advisor's balance sheet for the most recent fiscal year end. And again, this is asking about the advisor's assets and not the assets under management of the firm. So we'll move on to the updates within item 5, and these are going to be updates other than item 5K, which we've already discussed. Item 5D has been updated, and important to keep in mind here that, in this item 5D, you're going to be looking at your full client base and not just your separately managed accounts. And previously, when reporting in this section, you were reporting client categories within ranges. You're now going to be asked to report the number of clients within those categories and the RAUM attributable to each category. To the extent that you have fewer than 5 clients in one of these categories, you can check item 5D2 to indicate that rather than reporting the actual number of clients. The exception there would be for clients that are investment companies, private development companies, or other pooled investment vehicles. For those, you are not able to use that fewer than 5 option, and you're going to need to disclose, the specific number of clients within that category. And the FAQ also says that, if you have any clients in a particular category, that if you do not have any clients in a particular category, that you'll need to disclose 0 in item 5D1 as opposed to using that fewer than 5 clients option. The aggregate amount of AUM that you're reporting in item 5D should match up to the total amount of RAUM that's in item 5F. And because the IRD system hasn't been updated yet with the new form, we haven't had a chance to, look at the working version of the form. But my assumption there is that this is going to be a completeness check item. So hopefully, if those 2 numbers aren't matching up, the system will flag it for you, and you'll know, some adjustments need to be made. But to the extent that they don't put that in the completeness check, you will want to make note to double check to make sure those 2 numbers are matching up. And as with the other categories here, if a client fits into more than one category, you are going to want to put them in the category that most accurately represents the client, and of course avoiding double counting clients or assets there. And then to the extent that you sub-advise a registered investment company, a business development company, or pooled vehicles, you're again only going to report on the sub-advised piece of those assets. So there's been some other miscellaneous updates to the item 5. In 5C1, you're now going to be asked to report the number of clients for whom you provide advisory services, but they don't have any AUM. And an example of that would be, perhaps a new client agreement has been put into place, it's signed, it's effective, but the account has not yet been funded. And that's probably going to be, a relatively small window of time, but, it is something that could get picked up. In terms of item 5F3, you're now going to have to report the approximate amount of total RAUM attributable to non-U.S. persons. And then in the Schedule D, Section 5G3, you're also going to be required to report the RAUM of all parallel managed accounts that relate to registered investment companies or business development companies. And the glossary to the ADV has been updated to include a definition for parallel managed account. So to the extent that you have, an account that you think may fit there, you'll definitely want to consult that definition to see if that account could get picked up and therefore need to be disclosed in this Section 5G3. Item 5I has been amended to ask about the RAUM attributable to certain RAP fee programs. And then in 5J, it asks whether you report client assets in item 4E of your Part 2A differently than you do your RAUM. So, this could pick up if you're reporting AUM in item 4E of your Part 2 as opposed to RAUM, you may need to check yes there. So on to some additional miscellaneous updates. There have been some updates made to the Schedule D, Section 7B1 that you guys complete for your private funds. To the extent that you're operating a 3C1 fund, you're now going to need to disclose whether you limit sales of that fund to qualified clients. So if you're an ERA, you're not going to be required to make this determination, and you can simply answer no there. So if you're operating 3C1 funds and you're fully registered, you're going to want to revisit that definition of qualified clients, and then also take note that for your 3C7 funds, this is not applicable, and that's due, to the qualified purchaser standard and a higher level of eligibility for those investors to come into your funds. In terms of question 23, you can see here on the right-hand side of the slide, there's been some changes to the wording there. They've also added an additional question to 23E, wherein you're now going to have to disclose the PCAOB assigned number for your auditing firm. And we've got a link here on the slide for how you can locate that, that registration number. That's also going to be in the FAQ, which we provide a link to in our how-to guide for the ADV. So if you're unsure of how to locate that number, just reference this link here. So in terms of umbrella registration, which some of you may be more familiar with in terms of relying advisors, basically the SEC is just codifying the information that came out in 2012. So the conditions that are set forth in this recent rule are the same conditions that were set forth in the 2012 no action letter. Important to note, they're not expanding this concept for ERAs at this time. And, any relying advisors are now going to have to complete the new Schedule R. And again, that's for each relying advisor. And the Schedule R is pretty much substantially similar to items 1, 2, and 3 of the Schedule A and B of the ADV. There is going to be an option to check a box, and it'll pre-fill the information from your Schedule A and B into the Schedule R, and then from there you will be able to manually edit it. So that should, cut down on the timing a little bit. And then an important note is U used within Schedule R is going to refer to the relying advisor. So the takeaway here really is, again, they're not changing the conditions that are related to relying advisors. So if you currently have a relying advisor listed on your Form ADV, it's generally just going to be a matter of moving that advisor over to the Schedule R. So they've also made some changes and clarifications to the ADV and to the instructions themselves. So we'll kind of talk through a couple of those changes. In terms of item 2, they're doing away with the phrase newly formed advisor, and they're renaming it investment advisor expecting to be eligible for commission registration within 120 days. So here, they're not really changing anything about those conditions for newly formed advisors. They're simply lengthening the name. In terms of item 7, they've made some more clarifying notes in 7A and 7B. Some notable changes to take note of for the 7B ones are you're now going to be required to identify the relying advisor in question 3 and question 7. And then in question 21, you're also going to need to look at whether the private fund has ever relied on an exemption from Reg D. The current wording of that item is whether that private fund is currently relying on exemption from Form D. From Reg D. So take note of that change. In terms of item 8, if you are a newly formed advisor, they're adding clarification to that instruction to say that you should answer those questions based on the types of activities you expect to engage in during the next year. They're also breaking out item H into 2 questions, which you can see on the right-hand side of your slide here. Item 1H is now going to cover compensation to persons other than employees for client referrals, whereas item 8H2 is going to cover compensation to employees in addition to their regular salary. And there's also a clarifying note added to item 8I, which notes that you should include regular salary paid to employees when you're responding here. And these are still going to be yes or no questions. There's not an option here for you to fill out, any narrative information or assumptions here. So do take care when you're answering these questions. The SEC does look, here, and you could, bump up against broker-dealer concerns. So definitely take care when answering these questions. So now we'll take a look and try to answer some of the questions that you guys have been submitting throughout the webinar. So we've had a question, do these disclosures apply to ERAs? And the answer is in most cases, yes, to some of them. Item 5 would not be applicable because that's, you haven't had to fill that out in the past. Item 1 changes would still apply as before. So would the 7B1 information. And again, like we noted, the umbrella registration concept is not being extended to ERAs. So if you're an ERA and you're hoping to, add on a relying advisor, unfortunately, that's not going to be an option at this point. So we've had a question, if U.S. advisors manage non-U.S. managed accounts, does the advisor need to answer item 5 with respect to these accounts? And the answer there is yes. You do need to, provide information for those non-U.S. managed accounts there. If the firm does not have any material changes at this time, do they need to submit an ADV update now or wait until their normal filing or their annual updating amendment? And the answer is no, you don't need to file the updated ADV now. You only need to do that if something comes up at the firm that's a prompt amendment. So say you move offices or you launch a new fund and you need a private fund ID number for that fund in order to report it on your Form PF, or you launch a new social media account. Otherwise, no, you can wait until your normal updating amendment. Most of our clients' fiscal year end is going to be December 31, so there's going to be a lot of filings made in March. That's going to be here before we know it. So as we mentioned at the outset of the webinar, you guys are going to want to start to think through the kind of information that you're going to need to pull. If it's not information that you're currently keeping track of, you may want to go ahead and implement it, familiarize yourself with the new questions, and touch base with your finance team or your accounting team or whoever it is that pulls that information for you. So we've had a question, I think we've answered it during this, but if you have a new social media site, are you required to notify the SEC? And the answer to that is yes. New social media accounts after October 1, you do need to file a prompt amendment. If not, you can wait until the annual amendment. So we've had a question, would you recommend that firms now better prepare, how to better prepare for the upcoming changes? Some examples of that could be reviewing your client accounts to make a determination as to which accounts will be deemed managed accounts. As we said at the outset, there is some carve out there, particularly with respect to pooled vehicles. So if you have, a fund of one or you're sub-advising a UCITS, you may want to go ahead and start kind of taking a look to see if that could be deemed a separately managed account. Like I said, we've reached out to the SEC to try to get guidance there, but unfortunately we haven't heard back. So again, reviewing those clients' accounts to determine what could be deemed a separately managed account for purposes of the ADV. Also reviewing required information to ensure you have appropriate records to populate the form. Important to be consistent here. And then also think about possible changes that might prompt an other than annual amendment. So we've kind of touched on the bigger ones like moving offices or something like that, but other ones to think about is maybe your administrator is moving offices and you've disclosed them as a books and records keeper. So if they're moving offices and their address has changed, technically that needs to be updated in the Schedule D. And so that could prompt you to make an amendment to the ADV, in which case you're going to have to start answering some of these new questions. So we've also had another question, what information on the form ADV will be pre-populated? So the old information should carry over, just as it does each time you make, an other than annual amendment or your annual amendments, but you'll need to add in the new information. In terms of the Schedule R, you will, of course, need to populate that information for your relying advisors. And then you'll also want to go into the form and remove your relying advisors from certain sections. So previously, you may have been disclosing them in item 1B or in the 7A. You'll also want to pull them out of there because now they're going to go into the Schedule R. So another question on social media accounts. If a social media account is not new, but has not been reported, do you need to file now? And we think no, you don't have to file a prompt amendment. But once you complete the new form, you do need to go in and update changes to it promptly. So, say the web address to it changed, you would need to go in and update that promptly. But again, if you already got it, you don't need to go in and fill out the form now just to disclose that pre-existing social media account. So I think that's everything we have for today. If we did not have a chance to get to your questions, we will make sure to get back to you after the webinar later on this week or next week. We appreciate your time and hope everyone has a great day.